Hello everyone, Tony here. Welcome to KIS Investing, where we try to keep investing simple. Keep it simple. Today I want to talk to you about a very important subject, market awareness. And why is market awareness so important? And why so few people have it? A lot of people think market awareness is just watching CNBC, reading an occasional Bloomberg article, or reading some financial articles a few times a month. Guess what? That is not enough. In order to become a good investor, a good trader, and somebody who understands finance, market awareness is super duper important. And what is market awareness? Market awareness to me is knowing where everything is trading. What do I mean about that? You have to know precisely what every major index has done. For example, let's take a look at the S&P. What has the S&P done this week, this month, the last 3 months, the last 6 months, the last year, the last 5 years? How much does the S&P return on average in the last 5 years, in the last 10 years? That is part of market awareness. And in my weekly videos, I talk a lot about market awareness. I want you to be aware of the important things in the market. So, number one, we must understand where the indices are trading, because we can set trends. We can see if the indices are above the 20, the 50, the 100, the 200-day moving averages. We can see if there are resistance levels, if there are support levels, etc. Also, besides the indices, as number two of importance is the VIX, is the volatility. Remember, when the VIX is high, that means there's a lot of fear. That means the market is probably going down. We have had for the last 10 years, except for this year, super low VIX. And this super low VIX has pushed the indices higher and higher and higher every year with almost no down moves. It is important to keep an eye on the VIX because the VIX can tell you where the market is trading and where is it going to trend. For example, if the VIX is trending lower, that means the market is probably gonna trend higher. Not only look at the VIX level, but look at the VIX trend, because VIX is very trendy. It normally trends sideways to down, and in a very few occasions, like we've had in March or we had in December 2018, the VIX really spiked up and created very good buying opportunities. So one of my mistakes when I was starting trading was trying to short the market because it was high. But the VIX was trending lower when I was trying to short the market. And guess what? I got absolutely killed. And what happened to me in March? The VIX hit 80. And I believe I'm an experienced trader. I do more than 10 to 20,000 trades a year. And even I got scared and covered a lot of my long deltas, meaning my short puts. And I really regret it because even I felt fear when VIX was at 80. And I regret closing those puts because they would be worth hundreds of thousands and millions of dollars if I would have just held them for 1 or 2 weeks more. And that, for example, really, I have to be honest, it really pissed me off because I thought I could handle a very huge down move and take advantage of the volatility. But even I got scared. So take a look at the VIX as the number two factor. Remember, the VIX trend is more important than the VIX level. When VIX is above 30 for the S&P, it's very hard to be long the market. When VIX is trending lower, it's very hard to be short the market. So take a look at the trends of the VIX. Then we should take a look at bonds. Why? Because bonds also serve as a fear indicator. When the market is scared, people put money in bonds, especially in treasuries, for protection, right? Also, bonds tell you if inflation is coming or it's not coming. Of course, the Fed can control short-term interest rates, but the market actually controls long-term rates. And if the market starts sensing inflation, which I believe there's a lot of inflation, everybody says there's no inflation, the market, the bond market will sense it before everybody else, and it will tell you what to do. Remember, when inflation is going up, there's a lot of things we must do. First, we saw the indices. Number two, we saw the VIX. Then we saw the bonds. Number 4 factor of importance is the US dollar. You can follow the US dollar with the symbol DXY and the symbol UUP. What has happened to the dollar in the last few months is the dollar has devalued tremendously. The US dollar is getting pounded. Of course, if you live in the US, you do not know what a currency devaluation really means. If you live in a country outside the US, you understand currency risk tremendously well because you have lived it and suffered it. Right now, the Fed, the Congress are printing so much money that the US dollar is getting pounded to the ground. It's getting annihilated. It's getting demolished. It's getting dinged up. And what happens when the US dollar devalues? Get what? Commodities and everything that hurts when you drop it on your foot goes up. And that's my next factor. Look at commodities. Commodities like corn, soybeans, copper, lumber. I could also include there gold, Bitcoin, oil, etc. There are 2 commodities that don't really act together with each other. For example, gold should be going up very strongly now that the dollar is getting devalued. But guess what? Gold has also had a big down move when the dollar has been going down. That's kind of strange, and I'll tell you why. Also, oil. Oil should be flying up when the dollar gets devalued. And dollar right now, the oil is trading more with COVID and the demand that COVID creates. When there's a lot of COVID cases, people think people are going to use less oil because they're going to get less on an airplane, less on their cars, etc. So oil also should be trading inversely to the US dollar, but it's trading also very, very close to the COVID cases. And gold, why is gold going down when the US dollar is going down? Because gold actually is very related to interest rates more than the dollar. The only thing that gold hates is interest rates going up. That's part of market awareness. How do I know this? Because the smartest people on Wall Street have studied this for years and years, and you have to learn this stuff. So if you have seen interest rates have gone up tremendously the last 4 or 5 weeks, and what has happened to gold? Gold got really hammered and punished. That is a quick view of market awareness. What I'm trying to do in my weekly videos is summarize the important parts of market awareness that you need to know. So if you can sit down, watch a few minutes of my videos and be done with your market awareness. If you didn't have those market awareness videos, I would suggest that you look every week on the weekends. Take a few minutes, an hour or so, look at all the indices one by one, and then take a look at the sectors within the indices. For example, the S&P 500 has 11 sectors: the financial sectors, the materials, the consumers, the financials, the real estate, etc., because all that gives you market awareness. The key to making money and to investing is to know where things are trading and where are they going to trade in the future? Of course, nobody has a crystal ball, but it's better to trade with the trend that's happening now. For example, it would be lunacy to be shorting commodities now because the US dollar is crashing. If the US dollar stopped going down, you could think about shorting commodities. But you would never go and short commodities while the US dollar is going down. Also, you would never buy gold when interest rates are going up. You should buy gold when interest rates are coming down because they trade inversely to each other. Also, you should never try to short the market when VIX is trending down. Why? Because a trending down VIX makes the stock market go up. The algorithms are programmed to see the trend of the VIX. And if the VIX is going down and trending down, it's going to be super hard for the stock market to correct. So if you want to buy, wait until VIX spikes, and then the big spike will make the market go down and give you an opportunity to buy. Don't short, remember. The worst thing in life is being on the wrong side of the trade. And believe me, I am the king. I invented being on the wrong side of the trade. I have been wrong on bonds. I have been wrong on currency. I have been wrong on the stock market. And I was wrong in March when VIX hit 80. And I should have been buying, mortgaging my children, my wife, my dog, my house, mortgaging this beautiful painting from Ryan McGinnis. I should have been selling everything and putting into the stock market. But sometimes fear grabs you. There are two emotions that traders and investors have to deal with: fear and greed. They are equally as bad. Right now, we have an excess of greed. People don't believe that the market can go down. Maybe it can't. Who knows? But it's very hard to make money if you're trying to short against the market. Remember, try to trade within the market. It's very hard to trade the turns. Everybody wants to pick the bottom and buy the bottom. Everybody wants to sell the top. Guess what? Maybe you're going to be able to do that once or twice in your whole trading and investing career. In the meantime, why don't you try to catch, if we're on an uptrend, try to catch a big chunk of the uptrend. And if we're going down, let the turn happen and maybe try to catch a short part of the downtrend. Also, your long positions should be bigger than your shorts. For example, your long positions should always be double the size of your longs. Another tip from Uncle Tony: never have all your trades going in the same direction. For example, if you're bullish the market, that's great. But maybe there's a few sectors that are suffering. So for example, right now you're bullish the market, okay, be long the S&P, but maybe be short some gold, because gold is in a little bearish trend because interest rates are going up. So what I'm trying to tell you is, by understanding market awareness, you will make money more often. And if you trade derivatives and options, that's even better because you can define your risk. Derivatives were invented to reduce risk, although many newbies are using them to increase risk. Right now, there is a record call buying. There has never been more call buying in the history of humanity. And normally buying long calls is a losing strategy. But in the last few weeks, it has been a great winning strategy. This year, it has been a great winning strategy. So newbie investors think that they're going to become rich by buying calls. I have news for you guys. You won't. If you don't take your profits rapido, fasto mundo, you're going to lose it all. See? A smart trader, number one, has market awareness. Has market awareness about the indices. Has market awareness about the VIX and volatility. Investors that are very smart have market awareness about bonds and interest rates. Where are they going? They have market awareness about gold and oil that trend with commodities, but with the caveats that we talked about. And also, great investors know about commodities and where are they trending. Also, currencies, etc. So there's so many ways to make money in the stock market. Of course, you're never going to be right 100%, and you're never going to be wrong 100%. But this market awareness of where we are, where we're going, will help you place trades in the correct manner. Also, when VIX is trending down, it's a great time to buy a little protection. Buy a little protection like my 441 trade, which is protection that's fine. Please take a look at my video explaining the 441. So there you have it. If you want to be a more rounded investor, understand the big trends. Understand what's going on in each of the sectors we talked about. Once again, if you understand the indices, volatility, bonds and interest rates, gold and oil, commodities and currencies, you will make very smart decisions. Of course, if you like trading Tesla and Shopify and Zoom, do it, but do it small. Have fun with it, because also trading and investing must be fun. But that's not where we're gonna allocate most of our money. Most of our hard-earned money, our saved money, our money that we took from our wives, from our parents. I'm kidding. All the hard money you've worked all your life to save, you should not risk it. You should place it smartly and go where the stock market is telling you where to go. If you watch my videos every week, I will save you tons of time. And I will give you market awareness in just a few minutes. Of course, I'm doing these videos for you, but I'm also doing them for me, as it forces me to look at the market things that I must be looking at every week. And sometimes we're lazy. Human beings are lazy. What would you rather do? Go out and play with your dog, a round of golf, to your favorite restaurant, etc., or watch where the S&P traded the last week, the last month, etc. Of course, maybe that's not fun for you, but you still have to do it. If you want to be a well-rounded investor, by any means, watch Tasty Trade, number one, Tasty Trade. Watch financial media, watch Bloomberg, read Barron's. I mean, you can do whatever you want, but understand that the market never lies. The market is telling the truth. And when you look at the market, it's telling you, even if it's telling you something you don't want. I want the market right now to go down so I can buy more. But the market is not telling me that. The market's telling me, Tony, the VIX is trending down and we're not going to go down. Of course, we can have one down day, but the trend is up. The VIX is trending down. The stock market is going to go up. Interest rates are trending up. Gold is going to trend down. Commodities, the US dollar is trending down. Commodities are going to trend up. So use red days on these trends to get in. If the US dollar spikes, maybe that's your chance to buy some commodities. If interest rates go down, maybe it's your chance to short some gold. If COVID cases spike, maybe it's a chance for you to get into some oil. If some bad news happens and VIX spikes, maybe that's your chance to get into the indices. You see what I'm saying? By being aware of where the market is, you will make better trading and investing decisions. I hope this video is valuable to you guys, and I hope in this channel I'm creating some value for you. I would love it if in the comment section you would give me some comments of what other market awareness things you'd like to see in this channel. In this KIS Investing channel, I want you to be a well-rounded investor. I'm trying to give you market awareness. Also in my Trade of the Week videos, I'm trying to give you trades that follow what I'm seeing in the market. And not what I'm seeing, what is happening. Because people sometimes want to see what they want to see. And people want to think that the market's going to crash. The VIX is trending down. The market is not going to crash. Normally, markets crash when they go down, hit support, and support fails, then they crash. It's very hard for a market to crash from an all-time high. You could get a couple of days of down moves, sure, but a crash from all-time highs, no. It won't happen, especially with VIX trending down. Thank you very much for watching. Remember, I have a course on financial education called Permanent Millionaire with the 9 proven steps on how to become a millionaire. There's a link below to the free course. Take it, it's free. Why not? Also, if you want to trade and invest using the same trading platform that I use tastyworks. For me, the best trading platform in the world. There's a link below that you can use to sign up for your tastyworks account. And lastly, you know it, I want to wish you all good luck trading and good luck investing. KISS, keep it simple, and remember, you gotta risk it to get the biscuit, baby. Now let's go make some money.